The Bank of England is about to trap thousands of traders. GBP a USD just ripped 40 pips on the Fed hold. But tomorrow's BoE decision could reverse everything in seconds. 1 vote split changes the entire structure. Hawkish hold. We are targeting 1.3450. Dovish surprise? This pair collapses toward 1.3200. I'm breaking down 2 scalping entries and 1 swing trade you can execute right now. Full plan with exact stops and targets in the video. The Federal Reserve just held rates steady, and pound sterling to US dollar ripped 40 pips higher in minutes. But here's the thing, that move might already be dead money. There is one danger zone and one hidden opportunity right now. I'll show you both. The Bank of England decides tomorrow. And the vote split is the single most important number you're not watching. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything. Let's call it right now. Pound sterling to US dollar is in a range-bound recovery, not a trend reversal. The Fed hold sparked a short squeeze, but the broader structure remains bearish until we clear 1.3380 with conviction. Write this number down, 1.3300. If we break below that today, the entire recovery structure resets and we are heading straight back to 1.3260. Here's what the herd isn't seeing. Retail traders are piling into long positions after the Fed pop. But ING just warned that dovish repricing remains the clearest near-term risk for sterling. That means the crowd is long into an event. Where the Bank of England could easily disappoint, Scotiabank strategists put it bluntly, pound sterling to US dollar is bearish neutral, with the RSI stabilizing in the lower 40s and near-term moves bound between 1.3250 and 1.3350. That's a 100 pip box. And whoever breaks it first wins big. Pull up the daily chart. Pound sterling to US dollar has been in a steady decline since mid-July, dropping roughly 1.2% in less than 2 weeks. The pair is now trading below the 20-day exponential moving average at 1.3353. Which has acted as dynamic resistance. The 50-day MA sits at 1.3367, we are basically parked right on it. The 100-day MA at 1.3386 and the 200-day MA at 1.3378 form a resistance ceiling just above current price. The MACD on the daily is negative at minus 0.001 with the signal line below zero and pointing firmly downward. That's not a bullish divergence setup. That's a momentum vacuum. Drop to the 4-hour chart. This is where it gets interesting. The market is forming a wide consolidation range around the 1.3310 level. An upside breakout would open the door to 1.3375, while a downside break suggests a move toward 1.3260, with scope to extend to 1.3190. Here's what most traders miss. The 4-hour RSI is hovering near 44, subdued upside momentum. Recent rebounds are corrective while the pair trades under overhead technical barriers. This isn't a trend reversal. It's a bear flag inside a broader downtrend. The 1-hour chart shows the V-shaped recovery off the 1.3280 baseline. We are currently consolidating in a compact range around 1.3309, extending down to 1.3272. The stochastic oscillator confirms the scenario. Signal line below 80 pointing downward toward 20. The ATR, 14, is at 0.0083. That's 83 pips of average daily range. With the BoE decision tomorrow, expect that to expand significantly. The ADX at 36.38 indicates a strong trend, but it's a downtrend, not an uptrend. Key levels to burn into your brain: resistance, 1.3307, R1, 1.3316, R2, 1.3332, R3, but the real ceiling is 1.3360 to 1.3380. Above that, 1.3420 to 1.3450 is the major horizontal channel boundary support, 1.3275, S1, 1.3266, S2, 1.3250, S3. The psychological floor at 1.3300 is the line in the sand. Below that, 1.3260 to 1.3280 is critical multi-week structural support. Just this morning, Scotiabank flagged that the local range from June is bound between support near 1.3150 and resistance closer to 1.3550. We remain neutral absent a break of that range. The Fed just held rates at 3.50% to 3.75% on a 9-3 vote. 3 members voted for an immediate hike. That divided vote signals policymakers remain hawkish, and markets are now pricing roughly a 1 in 3 chance of a September hike. But here's the real story. Sterling read that Fed hold as a refund rather than a warning, spiking roughly 40 pips into the 1.3350 area. The premium that was priced into the dollar came out on the headline. Now focus shifts entirely to the Bank of England. The BoE is widely expected to leave rates unchanged at 3.75% on Thursday. Inflation came in below the central banks forecasts in June, slowing to 2.6% year-on-year, a 15-month low. That gives the MPC cover to hold. But the vote split is the variable. In June's meeting, 2 officials voted for a rate hike. ING expects a 7-2 vote to remain the base case, though Catherine Mann could join Hugh Pill and Megan Green in supporting a hike. If we see 3 or more hawkish dissenters, sterling spikes. If we see any surprise rate cut or explicit dovish forward guidance, the pound collapses. HSBC sees downward pressure for pound sterling to US dollar given easing inflation and weaker labor market data. The key risk comes from higher oil and gas prices, which could feed into inflation over the coming months. The cross-asset linkage is critical here. DXY is trading near 101.30 after the Fed decision. US Treasury yields compressed post-FOMC, which helped the pound. But the yield differential story is shifting. Sterling still retains a mild yield advantage, but that buffer is thinning. Geopolitics also matter. Oil prices jumped more than 4% following fresh escalation in the Middle East. That's inflationary for both economies, but it gives ammunition to the hawkish faction of the MPC.do. You think the BoE delivers a hawkish hold or a dovish surprise? Comment hawkish or dovish. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 2 scalping strategies and 1 swing strategy. Every single one has exact entries, stops, targets, and invalidation levels. Strategy 1. The opening scalp, scalping, high probability. This is for the London Open tomorrow, right after the BoE decision hits the tape. Focus on the 5-minute chart. We're looking for a structural trigger right at the 1.3300 psychological level, exact trigger condition. Price taps 1.3300 and prints a bullish engulfing candle on the 5-minute chart. Our price breaks above 1.3332, R3, with a strong close, entry at 1.3305 if we get the rejection bounce confirmation, or 1.3335 on the breakout above R3. Stop loss at 1.3290 for the bounce. That's 15 pips of risk. For the breakout, stop at 1.3315, take profit 1 at 1.3360. This is the immediate post-Fed ceiling, take profit 2 at 1.3380. The major overhead resistance, risk and reward ration is 1 to 2 to 1 minute and 2.5 seconds depending on which trigger fires. What instantly voids the scalp? Any 5-minute candle close below 1.3280 invalidates the bounce setup. Any failure to break 1.3332 within 2 candles voids the breakout. The opening SCLP entry at 1.3305. 5M bullish engulfing after the tap. OR 1.3335. Breakout above a 3. Stop loss at 1.3290. Bounce. OR 1.3315. Breakout. Take profit 1 at 1.3360. Take profit 2 at 1.3380. Risk and reward ratio is 1 to 2 invalidation. Void if 5M candle closes below 1.3280. Bounce. Or fails to clear 1.3332. Breakout. Strategy 2. The liquidity grab, scalping, counter noise. This one's for the smart money traders. We are hunting the stop cluster just above the session high. The 15-minute chart is your weapon here. Look for a fake breakout above the 1.3350 to 1.3360 resistance zone. This is where retail stops are stacked from the Fed pop. Exact trigger condition. Price spikes above 1.3360. Triggers the stops. then snap back below 1.3350 with a bearish engulfing or shooting star on the 15-minute, entry at 1.3345 on the snapback confirmation. Stop loss at 1.3370, just above the wick high, take profit 1.3300, the psychological floor and nearest intraday liquidity pool warning. This requires fast execution. The move happens in minutes, not hours. If you hesitate, you miss it. The liquidity GBP entry at 1.3345, 15M bearish engulfing after fake breakout above 1.3360. Stop loss at 1.3370, take profit 1 at 1.3300. Risk and reward ratio is 1 to 2.2. Invalidation. Void if 15M candle closes above 1.3370. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment. This is the big one. Based on the 4-hour and daily bias, this swing trade captures a multi-session move. The hawkish BoE hold long expansion if the BoE delivers a restrictive policy view, signaling that persistent domestic service inflation will block rate cuts for the remainder of the quarter. We go long trigger condition, clean 4-hour close above the 60 MA, 1.3367, with bullish MACD cross confirmation. Entry at 1.3380 on the 4-hour close, stop loss at 1.3315, placed outside the daily structure, below the recent swing. Low, take profit 1 at 1.3450. Major structural resistance, take profit 2 at 1.3550. The June range ceiling, trailing stop rule. Once price reaches halfway to TP1, 1.3415, move stop to break even. Once TP1 is hit, trail stop to 1.3400. Invalidation. Daily close below 1.3300 shifts the medium-term outlook back to bearish. Risk-reward ratio is 1 minute and 3.2 seconds to TP1, 1 to 5 plus to TP2. The session SNG entry at 1.3380, for H close above 60 MA with bullish MACD cross. Stop loss at 1.3315, take profit 1 at 1.3450, take profit 2 at 1.3550. Risk and reward ratio is 1 to 3.2. Invalidation. Void if daily close below 1.3300. The dovish surprise short continuation if the BoE prints a split vote surprise rate cut or presents explicit forward guidance mapping out aggressive easing parameters. The entire setup flips. Trigger condition. Confirmed technical breakdown beneath 1.3300 on the 1-hour chart. Entry at 1.3290 on the breakdown candle close. Stop loss at 1.3350, above the high of the breakdown candle. Take profit 1 at 1.3200, structural long-term swing support. Take profit 2 at 1.3150, June range support. Risk to reward is 1 minute and 2.7 seconds to TP1. 1:3.5 plus to TP2. The session swing. Entry at 1.3290. 1H close below 1.3300. Confirmation. Stop loss at 1.3350. Take profit 1 at 1.3200. Take profit 2 at 1.3150. Risk and reward ratio is 1 to 2.7. Invalidation. Void if 1H candle closes above 1.3320. 2.6. Risk management pulse. 30 seconds max. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I'm talking 0.5% max on the opening scalp and liquidity grab. No positions through high-impact news. Stops are non-negotiable. This is how you survive to trade the next big move. Let's recap the single most critical level for the next session. 1.3300. Above it, the recovery stays alive and we are targeting 1.3450 on a hawkish BoE hold. Below it, the bears take full control and we are heading to 1.3200. Maybe lower. Tease tomorrow's focus. The BoE decision and Governor Bailey's press conference. If he signals a September hike, the whole monthly trend flips. If he sounds dovish, the pound crashes through support. I'll have the updated blueprint 24 hours from now. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis and then loop back to today's Nasdaq Gamma flip later. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.